Ladies and gentlemen, we have an important video today because there is going to be a crazy week ahead of us in terms of the stock market. We got tech stocks that are trading at all-time highs. Many of these tech stocks need to report their earnings next week. And in addition, we have one of the key inflationary data metrics that's going to be released at the end of the week. This is a really important gauge and a reliable gauge for the Fed to make a very strong and anticipated decision if they are going to cut rates in the near future, hold them steady, or even possibly hike them. This is going to give us more of an insight, and Wall Street is going to be pricing this in. Now, talking about Palantir, still sitting at a very interesting support level, and if it can get a little bit of a bullish push here, if these tech stocks continue to release bullish earnings, Palantir's earnings are only about 15 days away. So if you're new to the channel, hit that like button, subscribe for daily videos, and of course, I'm not a financial advisor. I'm collecting the data and dispatching it to you. Now, before we really break down PLTR, talking about their upcoming quarter earnings for Q4, let's talk about the inflation data and the tech earnings stocks that we do have coming up this week. Now, with that, you got Netflix that's going to be happening on Tuesday, followed by Tesla on Wednesday. You're going to have Johnson & Johnson, United Airlines, Verizon, and TNT. So some very large stocks that will be reporting their actual earnings reports in this week right here. Also, the latest release of the Personal Consumer Expenditures Index, the PCE index, the Fed's preferred inflation gauge, is slated for Friday. And like Yahoo Finance says here, right, this all comes as stocks are trading at the nearest and record highs right now, with the S&P closing at 4,839. Now, stocks, we have seen them, and we've seen this continue rally after we saw basically the consumer expenditure report that was showing that people are really bullish in terms of consumer spending right now in the economy. We're seeing actual increases in what analysts were expecting in consumer retail spending. Now, with that, in terms of what we have for Palantir, their earnings are slated for February 5th. This got moved up post-market. Earnings per share expected at 8 cents and revenue at $602 million. I think what's going to be happening here is the global macroeconomic impact is going to bring a lot of volatility to some of these big tech stocks, which will affect Palantir. The question is, where are we looking in the bullish direction, and where should we be expecting for support levels in the bearish direction? Now, if we see a fall in some of these top tech stocks that start to challenge these record highs, PLTR could be affected and likely will be affected. We could see PLTR coming down here, and it's actually been building the $16 level of support and building a strong support level here. With that being said, there hasn't been a lot of trading history in this $16 zone. If we zoom out on PLTR, in the lower points, PLTR has had a great amount of time and does like to consolidate between the 13s and the 16s. We could see fallbacks to here, corrections to here, especially around that 200-day moving average, which sits at about the 15s right here. Now, on the bullish side, if we continue to see good inflationary data, if we see bullish avenues that the Fed is paving out in terms of interest rate cuts, we could see Palantir assuming this very important level of support. And this could be a key catalyst for anticipations for their quarter earnings support. Like I said, it's going to be happening in about 15 days here. Now, reassuming the $17 level of support will allow Palantir, in my opinion, to hopefully have the momentum, the emotion, and the buying confidence to try to test these higher levels of resistance. Where that is at a physical and psychological level of resistance is right here at the 20. And right now with PLTR sitting at a $36 billion market cap, we've seen it at higher highs. Palantir is actually down over about 50% from its all-time highs, if we think about it. Even though that was back in 2021, Palantir now, looking at that, is profitable. We've seen that fourth quarter of GAAP profitability and has recently, in 2023, established its recent 52-week year-to-date high at 21.85. So if there's any catalyst here, we could see Palantir coming into the mid-20s. And just looking at historical price metrics, look at what happened from Palantir after those Q3 earnings were reported, and we saw them beat their expectations. Palantir went from 14 to 17 immediately, and then had that push to the 21.85. Now, in addition, with that being said, Palantir, as we sit here, a big indicator that I've seen that's kept me bullish in terms of the near term here, even though we are seeing these record high levels, is the earnings per share revisions. And this is Wall Street that is continuing to expect Palantir to hit this higher bar, setting it to a higher standard. This has happened with a lot of the recent quarter reports for Palantir, and they have still continued to beat these metrics and achieve these milestones. Now, with that, you have Palantir. A good catalyst is the AIP bootcamp. And what AIP is doing is really diving into that commercial customer base. And I talk about this, and I agree with Motley Fool here on many of the articles as they do reference this, is that this has increased over tenfold in the last 3 years. And that revenue from the customer category has grown through 33% year over year. And basically, what we've seen is not just the commercial customer base that's continuing to grow, but we're also seeing the commercial revenue that is being positively correlated with that. And in terms of the actual partnerships that Palantir has established and the extensions of certain contracts, these are continuing to evolve. These are continuing to deliver, and we're seeing it in front of our eyes. And what we've seen, even the CEO saying that there are a lot of people, this is from the last quarter earnings, saying in the next few months that are on the wait list to try AIP, seeing how it can bring efficiency, productivity to their business, and in terms be a win-win situation. So where we sit right now, Palantir, I think there's going to be a lot of anticipation here in the next 15 days going to those Q4 earnings. And if they are able to beat that, I think this will keep them at the highlight of the AI boom, and also for the inclusion, of course, of that S&P 500 index. We've talked about this. If you're new to Palantir, they have achieved that fourth quarter of GAAP profitability with their continued smashing of earnings, and they can have the inclusion to the S&P 500 at any time. It just depends when the board, when they do their, typical and their standard meetings coming together, they have to choose which stocks need to come out and which ones need to come in. Palantir could come in 2024. We've seen about a 5 to 7% increase in valuation when different types of stocks do enter the S&P 500, just due to the actual buying pressure that all of the index or different ETFs track on these index funds. That's really all I have for you guys. Lots of interesting information coming up here. I want to know, what do you guys think down in the comments? Do you think we're going to see a slight pullback here, especially with these stocks that are trading at all-time highs? Do you think we're going to see the earnings being smashed by some of these top tech stocks, such as like what I talked about with Netflix and Tesla? I think these are going to be some large gauges on how these companies are actually performing behind the scenes, rather than the speculation and the valuation that the investors and the retail and the institutional perspective are giving them, and what they're actually paying for premium in a price. So lots of exciting things ahead. We'll be keeping you guys up to date. Of course, peace out. Take care. If you made it to the end of this video, I can't thank you guys enough for watching, supporting a smaller content creator, and we're going to continue making and giving you guys the most up-to-date news that's out there in the market. Peace out.